Hello, I'm Olivia Agar, and this is Mercado's Lamb and Sheep Market Insights update for Q4 2020, brought to you by Nutrient Ag Solutions. So the lamb market's now appearing to be following the lead of cattle markets, with restocker demand driving the market higher. Though we know producers don't like leaving grass uneaten, and there is certainly plenty of grass on the East Coast. We had that mild and wet summer for many sheep producing areas, and that's left restockers and opportunist traders with the opportunity to buy in. And whether that's to fatten lambs or breed, while lot feeders, they're just keen to take advantage of the bumper summer harvest in the east to fill their feeders. This chart paints a pretty good picture of the restocker lamb demand and how the market has moved. The orange line is the New South Wales restocker lamb indicator, and the green is the Eastern States Trade Lamb Indicator, which is the benchmark sale price for your standard supermarket-ready lamb that goes to slaughter. The prices for both of these categories of lamb tend to follow each other pretty well, and in times like 2018, when the season is poor and there's not much feed around, restocker lambs do sit at a discount to trade lambs. But if you fast forward along there to 2020, we can see that restockers have been at a big premium to trade lambs, which can make trading margins quite tight for producers. But the low cost of feed and a lot of eagerness to get sheep numbers up will offer some support. And there is plenty of enthusiasm in the east to build numbers, with recent surveys showing that 42% of producers are planning on increasing their ewe flock, given the season allows. And a good example of this is in the number of sheep that have been trucked across the Nullarbor from WA to the eastern states. So not all of this 1.3 million in 2019-2020 will be breeding ewes, but there's still very large numbers that are much better off going east to rebuild flocks than heading to the abattoir due to the dry conditions in WA. From a demand perspective, there are plenty of cautious forecasts because of potentially lower export demand and the strong Australian dollar. Looking at lamb export volumes, they did recover in the second half of 2020 and were higher than the 5-year average, which you can see is the broken line in this chart. And this equated to the annual total lamb export volumes only dropping 6% for 2020 compared to 2019. And when you consider that sheep sale yard throughput is down 14% and lamb production is expected to be 7% lower, it's not actually all that much. But one factor that will affect export values this year is that Qatar has removed a 50% subsidy which helped make air freighted Australian lamb affordable for their customers. The subsidy has been in place since 2015. And even though Qatar has a pretty small population, they are our third largest lamb export customer. What's important to note, though, is that even before the subsidy, Qatar took 4% of Australia's lamb. So they will still be a market for us going forward. Whether the lamb still goes to Qatar via ship trade or it has to be absorbed by other markets, it's probably going to have to be cheaper than it otherwise would have been. Thanks for listening to this quick lamb and sheep market update. For more insights from Mercado, head to our website or listen to our podcast, Commodity Conversations.